evening, TheoTrade. This is Coy Rosenblum, and you're watching the Theo Nightly video for January 23rd, 2019. We're talking earnings, and more earnings. We've had Netflix, we're going to look at Ford, and some airlines, and some other names for the next trading session. But before we get into earnings, we'll talk about how to scan for them, how to find them, and how to make sure your position may have earnings coming up soon. We'll take a look at the equity market first, starting with the S&P futures. And mainly what we're looking for is, what is the next plan? What is the next play? Is it more bullish action through these zones? Is it bearish action down away from these zones? Well, right now we're seeing compression. And that makes sense. Given this movement into our open air pocket or rapid sell swing down to the 2350 level and rapidly, just about as rapidly as it occurred, all the way back just shy of 2700. The V-spike reversal, volatility down, volatility right back up. So if you miss this little area about the 2700, 2650, we're there again. So we will be expecting some type of chop, consolidation, sideways action if you move forward into the future, probably between Dawn's gravity spots, roughly speaking 2575, 2626, 2682, and if we get there, just above 2731. But the main idea is we still remain in this gravity spot or this chop zone or boxes or rectangles. And that just represents consolidation and where the market has agreed on fair pricing. What's fair pricing? Neither the bulls nor the bears benefit, and the market results in sideways action or this chop behavior. We don't normally get these rapid volatility swings. This is a big down one, and that was followed with a month or two of chop, a big down one that was met just as rapidly with a big up one. So we will be expecting some type of chop within these areas throughout the remainder of January and into February. That thesis is going to be called into question if the market breaks under 2550 for our Dow mini futures. Similar logic, except we don't have those gravity spots, just key levels and inflection points. 24800, just shy of 25,000. And we can still see these rectangles or consolidation spots. Big down, big up, probably seeing some type of chop. So when you're looking at earnings or any type of option positions or swing positions into the future, chop, low to high, high to low. And the exception being any type of breakdown beneath this really 6,600 level or 6,500. This is in our Nasdaq, or above 6,800. We are seeing chop. And again, that is what is expected. That is what's going on. You can trade in this chop on the intraday frame, playing two levels or away from levels, especially if you get more breakdown or more sell side activity. Here's how to look at earnings in a quick scan basis. We can take a look at our stocks. We're looking in the S&P 500. We're looking at any type of stock in the next 1 or 2 sessions that do have earnings. If it's a 0, that means it happened today. And if it's a 0.5, it's going to happen after the close. Anything beyond that's going to be in tomorrow's session. And I'll pinpoint really 3 names, maybe 4, and then look at 3 airline stocks. So of these are today's reporting stocks. I want to focus on what's happening on tomorrow. That's when we'll see the video. So the video after market close. So any type of trade you want to set up, take off, hedge, protect, this is where to do it and where to look for those plays. Or just learn the concepts of how implied volatility or just earnings trades around these events. For tomorrow's session, we're going to be focusing on Starbucks, would be a big one. Looking also at Intuitive Surgical and Bristol Myers Squibb and the like. I think the big one's going to be Intel. Those are your 4 to watch. If you follow airline stocks, we do have American Airlines. We had American Express, right? So American Airlines is going to be reporting, and we're going to have Love is Southwest Airlines, and then JetBlue. So those are where we'll be looking for airline stock plays, or just XAL, our airline index. We'll start with a big one, Intel. I think that's going to be the big focal point for tomorrow's session. What is Intel doing? Chopping, trading sideways in a rectangle pattern. playing what we call low to high, high to low, low to high, high to low. Well, that's the thought process. So any type of trade should be a short or bear play into the resistance points just shy of 49.50. Earnings can certainly change that. So if you are in any type of spreads or open sell short positions, just shy of 50, just shy of the moving average, right? 1, 2, 3 times the market did this, that would be the correct play. But what happens if Intel gaps and goes and breaks through 50? That's the focal point for tomorrow's session and into Friday. This is what we're looking at. So for Intel, we can either see, right, the volatility says it's a 2.44, really 2.5 almost move. That takes us just above 50 per share and just under 46 per share. That's given where we are right now, and that's at a price pivot at just shy of 48. Again, the market should trade down. Would be perfect if we saw this move down to here, 46.50, 46, and that would complete a swing trade. May not happen. That's why earnings are risky, because things can go wrong. It can blow through resistance. In that case, would take stop losses with it and would be bullish or hedged or cautious or roll positions above 50 per share. Next up is Starbucks. Now this chart looks a little bit different than Intel's because it's in a strong uptrend. This is a bull flag taking place, a bull flag from the 68 per share level down to our support pivots, a little bit beneath the moving average, but did hold steady just above 60 per share. And this is a bull flag in motion. So the thought process is the opposite of Intel, which is Starbucks could easily keep trading higher. What about the earnings play tomorrow? Starbucks has a 67% implied volatility with roughly a $3 up or $3 expected down move. That takes us to 69 per share or just about 62.50 roughly speaking. That's going to be the play as we'll watch. If the earnings can propel the stock toward the prior high, that's your initial retracement or bull flag target. That would put swing traders in a profit zone, or if it stops them out and trades down to the lower spot. Odds are it will stay at some of these pivots and remain between them. We'll look one more stock at Intuitive Surgical. That's ISRG, mainly because it can be a day trader's vehicle, given how high the price is and how much it moves on a daily basis. Nonetheless, it is, looking at our implied volatility for Intuitive Surgical, 66%, $24 up or down. That takes us to about, right, these are approximate values at the moment. As you look at these for actual positions, you would do the hard mathematical calculations of expected move and plays. Roughly 550 per share or 500. This is more like Intel in that it does have a sell swing potential down away from 540 to keep this rectangle range in play. And again, that's going to target 500 per share on the way down. Any type of earnings play can bust that positive expectancy or bust that sell swing if there are surprises. And just quickly, we'll finish up by looking at what just happened in Netflix, how these plays occur, and what we're looking at. This is from a prior video that Netflix was up, up, up. Here was our expected move. Here was our earnings play. Up to here, 380, or down to here, roughly 330. Well, with earnings, we did the video as well last week. Netflix opened at the expected move and then went on down through it, and then actually tagged a prior target, which we are now beneath. Watch this level if you are in any open positions for Netflix. It's going to be about 320, 319, 350 per share. One more, taking a look at American Express. And you can see how it played out as well with our expected move logic. Here was our arrows. Here's the same logic we're talking about tonight. That went all the way down to the expected earnings play and then jumped right up off of it. So even if you don't have open positions, you can trade the immediate reactions, in this case a rejection or a push up away from our earnings play, earnings expected move, and key price levels. This logic isn't just for swing traders, it also works for intraday traders. All right, as always, be careful, be safe. This is Corey Rosalund with your Theo Nightly video for January 23rd, 2019.